FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 1/14/20. Hey, the markets have been fluctuating for sure, but they've just been going up and up and up. So has gold. Well, not so much silver. What's going to be? Can the market truly be the tree that grows to the sky? Well, unlikely. Just a question of when, not if. And when do you think that's going to happen? When is that if going to occur? Just email us with your opinion, kl@kerrylutz.com. Well, person who's been on the money because he's in the money stocks.com is our good friend Nick Santiago, who's with us. Happy New Year, Nick. And the market just keeps on rolling along like Old Man River.
It does. And if you remember the last time I was on your program, I said, give this market the upside bias. You don't want to fight it until you get a high volume reversal day to the downside. And we still have not had that happen. So until you do see a high volume reversal day, continue to stick with the trend. It's your friend, except at the end.
Yeah, except at the end. So just define, because many of you out there aren't familiar with that terminology, what is a high volume reversal day?
So if you look at the S&P 500, and if anybody can pull up a chart, and you could just do this easily, just do a quick Google search or just go to any platform, you could see that the volume in the spiders is generally probably between 50 and 60 million a day. That's very, very light volume. If you start to see the volume kick over 100 million on a sell side day, that's when you better go and run for cover. So just pull up the volume on the S&P 500 spiders. SPY is the ticker symbol there. Watch for that 100 million marker. If you trade 100 million and the market is down that day, I'm telling you right now, you better run for cover.
So the symbol is SPY?
SPY, correctly. It's called a spider, and the ticker symbol is just like a SPY, SPY. Right. So we call it the SPY. And again, you just want to follow that pretty closely. Watch that 100 million marker. If it's a big down day that session, that's generally indicating that the market is shifting, and you really, really want to be very, very careful.
Okay. So, well, a lot has happened here. We've seen the turmoil in the Middle East. We've seen the political situation go from ridiculous to absurd, and yet the market has continued going up. It looks like everything is really breaking Trump's way, isn't it?
It really is at the moment. I mean, he's a real Teflon Don, if you ask me. It's not John Gotti, right? It's yeah. Donald Trump. So, he's had everything go his way, and rightfully so. I mean, some of these accusations, and they're a little bit ridiculous. So I think people are tired of it now. They're just becoming immune to, some of the stunts that the politicians seem to pull, and it's really benefited the president. But with that being said, we have bigger underlying problems going on. I've been talking about them on your show for ages. And again, some of these problems, if they come to roost, we could have some big major headwinds. And I think the problems are going to come from Europe, and I think they're going to come from Japan, because those are the two places where you have negative interest rates in the banking system. And that stuff is just not really constructive for real growth. And we'll see. Eventually, that will be a headwind.
Yeah, negative interest rates are definitely toxic. Yeah.
There's no doubt about it. I mean, just look at the growth that goes on in Europe. There is none. There's no growth. And, money continues to get plowed into the dollar, and that'll continue too. That trend isn't going to go away anytime soon. So, again, there's definitely lots of headwinds out here. But right now, we still have a market that is moving higher. And that's really the bottom line.
All right. So speaking of markets moving higher, we also have seen gold break the 1550 technical resistance point today. Yesterday, it's pulled back a little bit. What's your take there?
So you know that I'm looking for gold to continue to consolidate first, and then a little bit down the road in 2020 and 2021, gold breaks out. I didn't really want to see gold take that big surge like it did just recently on the back of the geopolitical events in Iran and the rest of the Middle East. if you look at the gold chart, and anybody can pull this up, just go to a monthly chart of gold futures, or you could use the GLD. That's a decent proxy for charting. What you'll notice is that it's really just flagging. It's going sideways in from that big surge that we saw in August of 2019. So August of 2019, we had a really, really robust up move in gold futures. And now we're just continuing to go sideways. The longer that sideways base forms, the higher the price of gold will go in the future. So right now, it looks like it's putting in a pattern to get back up to the old highs that were made in September 2011, just above 1900. But once that is surpassed, I mean, we could, sky's the limit for where we could see gold going. I can't even give a number out because I really don't know until we get this pattern to completely be formed. But the pattern is forming right now, and that's a very, very bullish pattern for gold over the next 10 years.
Yeah, I can see it. I can see it happening here for sure. So, and obviously it's going to take silver along with it, and silver will at some point outperform gold as well.
Yes, silver is always the redheaded stepchild. But with that being said, if you do not have precious metals in your possession or own any silver or gold coins, I mean, you know, you're getting silver at a very, very reasonable price at this point in time.
Yeah, so is this going to carry the mining stocks with it as well?
FSN Radio. It's all about what's next.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's triple O. To learn more, go to otisgold.com. That's otisgold.com.
The Financial Survival Network. It's all about what's next.
Yes, it will. It will carry the mining stocks with it. Right now, if you just look at the GDX, that's Gary David X-Ray, that's an ETF for the gold miners, and that has been pulling back pretty nicely. One thing about the gold miners, they are leading down. They're going down while the gold stock, the metal itself, the commodity itself is holding up much better. And that tells me gold should pull back also. And it's probably the recent move has been more along the lines of geopolitical events and fears. But with that being said, gold miners will eventually even outperform the precious metal. They're just not ready yet. They're forming the same type of pattern. You just got to let these patterns really work themselves out and put in those chart bases. And once they do that, it's almost like a pot of a tea kettle. You put the water in the kettle and you put the fire on, and then it's just boiling. And then, you know, the whistle goes off. So that's where we are right now. We just started to get, the pot is just starting to get hot.
It's just getting hot, huh? Just getting started, huh? Starting to simmer.
Just getting hot, yep. You just put the flame has just ignited.
Yeah, that's funny. Yeah.
Sit tight, because it's going to take a little time, you know, before this water boils. But once it boils and coils, the explosion to the upside is massive.
So oil energy was interesting. It was up 34.5% for the year. You know, it started out at, try to remember the price. It started out at $45 roughly, ended up at 61. Yep. Is that a blip, or we going to
No, it wasn't more? It wasn't a blip. What happened was, I think the last time I was on your program, I gave energy the upside bias, oil the upside bias, and that's WTI crude, to 65. And on the night of that Iran attacking the U.S. so-called military bases, it was more like Roman candles being lit off in the sand. But that evening, oil spiked to $65 and change. So it hit our upside objective ultimately, even though it happened in the after hours, and now you've had crude pull back. But there's still a fair amount of oil support around the 57 I'm even going to say the 56 to 57 level. If that gives way, we'll go right back down to 52. But that's the range that crude is in right now. So it's in that range, 65 being the high end of the range, 51, 52 being the low end of the range. And I think we're going to stay in there because you do have so many geopolitical events really surrounding the Middle East. It's really hard for oil to go much lower than that at the moment, despite the fact that we don't use as much crude in U.S. is really, pretty much independent now of Middle Eastern oil.
So they tell us. So as far as the dollar goes, we started out the year, ended last year at 96.17 on the Dixie, and we finished the year at 96.50, which was basically flat, which is kind of where the lawmakers, the politicians and their finite wisdom wanted it to end up, right?
That's exactly correct. And, the president has been openly outspoken that he does not want a strong dollar. So, again, the dollar's pulled back quite a bit from October, but this is a consolidation pullback where the dollar wants to go higher. I am long the dollar now. I got right in at the bottom recently. Basically a little over a week ago, and I'm riding the dollar higher. I will be in this trade for a considerable amount of time as well. So I'm expecting the dollar probably to get back up to around 98. After that, it goes to 100, and we're talking about the U.S. dollar index, which is a dollar versus a basket of 6 currencies. The most heavily weighted currency in that basket is the euro, and I do expect the euro to start moving lower.
And interestingly enough, the euro finished at 112. It started out the year at 115, so it was down 2.2% year over year, whereas the dollar was only up 0.3%, which means a lot of those other currencies in the basket actually increased in value.
Yeah, they did, especially over the last 3 months or so. Well, I should say since October. But you're going to see now when you look at the euro, it's kind of made its climactic move, getting above the 112 level, and now it should head down to around 108, and then after that 105, and then after that par. So I just think that the euro is just another part of a failed science experiment. I've said that on your program for years.
Oh, many times.
And we're seeing it. We're seeing it. Yeah, everything gets bounces, but just look at some of these European banks like Deutsche Bank or Credit Suisse. You can just name it. It doesn't really matter which one. But these bank charts are just awful, and that is telling you what's going on. You don't have to look very far, but just Deutsche Bank's an $8.50 stock right now, and this thing has rallied for the last 2 weeks or the last 4 weeks. So, just think about it. And you have JP Morgan right now sitting at, $135 a share off of an all-time high. Deutsche Bank is just off of its all-time low. So you have lots of problems in Europe. It's a failed science experiment. It was done. I think it was just done poorly. That's really all I could say. But, I just don't see why anybody with any net worth in Europe would want to hold euros.
Agreed. And interest rates were way, way down for the year as well. So the dollar, was flat even on declining rates, which tells a big story.
It does. And you said it perfectly.
Yeah. So what else we got? So you're long the dollar still and short the euro.
That's correct.
Any other markets we should be paying attention to here?
Yeah. Right now, the software stocks have been very strong, and I'm talking about cloud software. So that was a hot sector early in 2019, and it really slumped in the middle to end of 2019. That has picked up some steam. So if that sector starts to slump again, that's another telltale sign that there are problems developing in the market. But right now, software names are holding up pretty well for the most part. And then you want to watch semiconductors. Semiconductors are always important. And right now, they're basically near their all-time highs. So the semiconductors give way, then you really, really, really run for cover. But, these are just little tidbits that I use to tell when a market is topping out. But right now, I've just basically been long stocks, for the most part, going right up into today.
Wow. All right. Well, hey, I guess that's all the news that's fit to print here. And we'll just have to sit back and see what else is going to happen there. Just go over, check out Nick's work, inthemoneystocks.com. And Nick, we will be catching up with you shortly, probably in February, see how things are progressing. Excellent.
And remember, watch for that high volume reversal day in the spiders. That really will tell the tale.
Hey, and any questions or comments for Nick, myself, kl@kerrylutz.com. That's the email address, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Oh, Nick, one other thing I was going to ask you about, Tesla, the stock. So it looks like it's been the beneficiary of a major short squeeze. It's up over $500 a share. What's your take on it?
So Tesla's now gone into what we call a parabolic chart pattern, meaning it's vertical on the chart. So anything that goes vertical, you have to be very, very careful of, because it's made its move, and it has been the beneficiary of a short squeeze. So this stock just crossed the $500 level. Today it's trading at around 507. I'm going to give your listeners a very good level to watch. It'll be 542 to 543. That should be a top for Tesla if it gets up there.
All right. 542 to, what was that again?
542 to 543.
All right. We're putting that in the show notes, and there's a link to Nick's site as well there. Go check it out. It's fascinating to watch Tesla. I mean, the company is, I put this in quotes, profitable. They got this new factory opening in China that's going to almost double their production, and factories opening in Europe and other places, and new models coming out. It's just, it's hard to separate the hype from the fundamentals and the technicals.
Well, the company is now is more valuable than GM and Ford combined. I have a hard time grasping that personally. That's why I use charts, because I can get a real understanding of price momentum and where things are being pushed. But in my opinion, I really love the innovation that goes on there, but I can't, honestly be a buyer of the stock up here at these levels.
Yeah.
It's a little ridiculous.
It's the greater fool theory, right?
It is. It's a tulip bulb to me right now at this price level.
Well, I think they give you a free bag of tulip bulbs when you buy a Tesla now.
Well, they better, because at this, I wouldn't mind owning the car, but at this stock price, I could not, with any good conscience, step into a single share of the stock.
All right. Well, maybe I'll buy a Tesla and have tulips painted on the side of it.
That's a pretty good idea.
All right. And hey, thanks again, and we'll talk to you next month.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.